Okay, good afternoon, everyone. It's my pleasure and our team from Thailand research team to share you about the Thai stock market for the first quarter of this year in the topic of Thai bourse poised for more gains in the first quarter despite the global headwind. We let you to go the first to my agenda. For the global recession fear versus Thai economy growth scenes, we will talk about the global recession and the opportunity in Thai economy to grow in and effect to the Thai stock market. We will see can increase for this year. So the outlook of Thai stocks market and the target offset index for this year and the first quarter. In the last, we will talk about the investment themes and recommend stock. I will show you the investment opportunity in the sector and the stock pick for the first quarter. My colleagues will tell you about the in detail in the individual stock. Okay, let's start with have the interest rate rise peak yet? I think is the loudest of the question. So we look at the global crude price and the energy price will drop and the US inflation may already peak because now the inflation or CPIs of US will decrease to 7% and this week we will see the CPI US from US too. So the decline in inflation remains well for both the Federal Reserve 2% year-on-year rate, as long as the labor market is upbeat and the unemployment rate is low. Even the last week, we see the average earning of US was lower than expected. But maybe the Federal Reserve of Fed still continue hike the rate in this year. To go to the Eurozone, for the Eurozone, although the price of crude oil and natural gas will lower down and the inflation rate, I think it has a peak. Central bank ECB facing more challenge than the US Fed in implement its monetary policy due to the difference in size and economic condition of member. We think the Eurozone inflation has not reached its peak yet and will slightly rise further given that price in the EU 5 biggest economy continue to rise. The CPIs may be lower from the 2 digits, but I think it will be at 9 to 7%. So the ECB, we have to follow the monetary policy and the economic condition too. So the next slide, if we see the major central banks, including the Fed and ECB, will stick to the interest rate hike in the first half of this year amidst ongoing effort to slow the economy and bring the inflation rate back into the target range, while rate hike will get inflation under control, that could slow the economy to the point that it tips into recession. According to Bloomberg Market Implied Policy Rates, the US economy may reach interest rate peak around the mid of this year, and Eurozone too. However, the risk of the recession is still to monitor. Okay, for the FOMC or Fed agree they should slow pace of interest rate increase. However, we have to monitor the economic condition to expect that the policy would have changed or not. Okay, that's why the next we will see that the GDP growth in the developed economy looking more worrisome than developing country, especially in Asia. So the developing country especially Thailand, China, Indonesia, and India. If you see in the chart, in the circle, red circle, the IMF predicts the global economy growth for this year slow from 3.2% to 2.7%, but the risk from Euro and US maybe more than in Asia. So the Thailand, I think they have opportunity for growth around 3% to 4%, and inflation from Thailand maybe lower or decrease to around 2 to 3%. So we have to look in detail about the growth of Thailand. Thai economy in 2020 or this year, I think my country would go by driven chiefly by the recovery in private consumption and investments, as well as high demand for goods and service after people live return to normal and economic activity resumes. While the US-China chip war has reshaped the global tech supply chains, and multinational companies are shift productions under the China Plus One strategy. Thailand may see the increase in FDI inflow, given is the good infrastructure and facilities to support investment in high-tech industry. Thailand fourth policy is aimed to transform the economy of Thailand into value-based economy. The flagship Eastern Economic Corridor or EEC themes designed to attract investment and boost the country industrial competitiveness. Okay, then if we look at the domestic consumption, okay, spending on foods and beverage contribute most of the country private consumption expenditure, and it remain at the forefront for this year. Spending on hotels and restaurants, one of the key contributors, it is passed by COVID-19, but is picking up pace to the reopening policies. And I think the category will be the country economic spread test in this year. On the other hand, household debt has continued to rise and are likely to affect the spending consumption power in the near future. Okay, and financial assistance compensation from the government or liquidity support or suspension in payment from the financial institution will influence the spending power of the household. So I think we can see the domestic consumption will grow continuously for this year. The next, the tourism. I think Thailand tourism sector is on the recovery path with the number of foreign tourists arrived, especially in late last year following the cancelling of Thailand Pass registration in July and easing of travel registration by many countries. We predict at the best case around 18 million visitors in this year, but after we see the China reopening again in this year, I think the tourist number could reach 25 million. Okay, and Thailand tourism is bouncing back faster than others. Okay, thanks to the series of government stimulus measures too. Thailand looks strength in its position, one of the world top medical tourism too. That's why exclude the tourists to have trip, normal trip, and medical tourism is so interesting for this year. So Thailand was and ranks for the globally and third in the Asian on the travel tourism competitiveness index in 20 and 21 too. So the tourism sector is the interesting sector for this year. So current account, go to the current account balance. Before the pandemic, tourism service balance maybe was a key driver of Thailand current account, but in the period of pandemic, I see the current account deficit is the most of the year around three years of coronavirus interruption. So we anticipate that continue the improvement in the Thailand current account. So we expect this year maybe the current account balance is expect to swing back to surplus. So the growth in export and trade balance may not be the impressive one, but I think the tourism will support the current account. Okay, for the next is the foreign reserve. For our reserve remain in the solid condition because it's the rank as number 2 in Southeast Asia. And although the stronger dollar has weakened the country foreign reserve last year, it also has a low foreign exchange risk thanks to its low foreign debt level. So in our view, the country in financial position will remain strong. In this year, the public debt to GDP ratio below the ceiling of 20%. We think that might not be a meaningful change in total public debt due partly to the fact that Thailand will hold the general election in the first half of this year. Okay, for the next is inflation. For inflation, I think the Thailand inflation in last year is attributed to cost pull factor, but for this year, I mean the demand pull type of inflation would be increased in the price of food and beverage product by pick up in overall economic activity and hike in the daily minimum wage too. Further increase in global energy price will pose a great risk to Thailand price stability. Bank of Thailand effort to control the inflation within 1 to 3% range target, I think remain a challenge, and there is a possible that inflation will overshoot the target. But the policy rate, I think Bank of Thailand expect to continue on the path of gradual interest rate increase. For the target, we expect they could continue increase the policy rate to 1.70% to 2% while try to keep an economic recovery. So the condition of the Thailand economy, I think, is too strong for the support the set index or stock market to go up. For the next factor is the election. Thailand now heading to election. Okay, for the election, general election is scheduled to take place on May 7th in May. Provide the House of Representatives complete its term of on March around 23. Okay, I have picked up the statistic about the data on the set return show in the period of election, before and after election. So set gain an average of 4.70% over the 3 months period before the election, and rose an average around 1.9% in the 1 month period before the election. And after the election days, post-election, we see set return around 1.3%. That can tell that in the period of election, before and after, set return would have the positive return around 4 to 5%. So if we can see the first half of this year, we can see the election, maybe we can happen to see the election rally. We'll see this first half. So I think can push the market higher since first quarter. Okay, for the next, if we look at the election, the case of the parliament was dissolved would be happen. If the house is dissolved, snap election must take place within 45 to 60 days. On the following days after parliament was dissolved, or the difference days shown in the table, the SET index growth at an average 27%. The sales price, the high gain of 3% in 2011. So maybe after the if they dissolve, maybe after that SET would go up, and we will see next for the election. Okay, maybe 2 cases for this. And the next US-China trade war, that I think maybe the opportunity for the investment from foreign direct investment who move to Thailand. Okay, and the next one is the foreign buying fund flow. Foreign investor accumulate net sales on Thai equity in the 5 years ago, but for the last year we will see that foreign investor buy back to Thai stock market around 200 billion baht. Okay, and reflect that foreign buying is picking up momentum following the SET index rebound from the lowest level last year, 1,520 points. So if we look at the foreign holding on Thai stock set to rise, holding of foreign, I think the local bourse dropped to their lower level at 24 to 25 in the mid of 2020, and even though they rose slightly later in the year, the reading declined again in 2021, but in the late 2022 or last year, proportion of foreign holdings moved up to 26%, but they are still below the 10 years average of around 30%. In our view, there is more room for foreign holding of local share increase in this year. That's why I think the fund flow will come back to Thailand and continue to go up. So if we look at the Thai baht, the chart shows that the Thai baht and fund flow into the Thai stock market move in opposite directions, and the baht appreciation attract foreign fund inflow into the Thai stock. So in line with the correlation coefficient around minus 0.75 during the period of Jan to December last year. Therefore, a strong baht is likely to push buying of Thai stock market from foreigners. We expect the baht to appreciate to around 33 against the US dollar in the first quarter maybe. Okay, that's why the Thailand stock market attract more capital inflow in this year. So we will look at the SET target, SET index target. After SET trade at PE ratio between 12 to 32 times since 2017, excluding COVID era. After PE ratio fell to nearly 15 times In the first quarter of 2022, the main index rebounds against and expect to advance to PE of 16.5 times. Our base case from this year for set index target is 1,760 points. With earning per share, we expect 107 baht per share. So the set expect to rise to 1,840 points at year end in the base case after the China reopening. To provide that, however, trader must keep an eye on factor weighing on the market. The downside is limited at around 1,550 points. So if we see for the first quarter, we look that set index target is around 1,750 and 50 points is possible. And now is set index now around 1,690 points now. So they have opportunity around 50 or 60 points to go to the target. That's why set target will go up, and the investment team that we look interesting for this quarter, we see the reopening of economy is the first theme that will affect to the sector like commerce, transportation, and hospital. Maybe go to the point that I think it will affect in the positive for the stock. And the interest rate upcycle is the next theme for they look at the bank. Okay, topic is SCB and the election rally. That good for the spending because the stimulus package from government before the election and after the election will support the spending has go continuously. We pick up the single. Okay, reopening economy. Okay, sorry, CPALL, BS and BM with that are our topic. Okay, let my colleague to share you about the detail in individual stock. Okay.
Yeah, good afternoon. My name is Hathaichanok Munwong, and welcome to Bumrungrad Hospital Public Company Limited. Bumrungrad is one of Thailand's leading premium private hospitals. It has the highest exposure to foreign patients in the sector. It serves as the best prey on recovery in foreign patients after the country reopening to international visitors. For foreign patients currently account for 67% of total patients, of which 56% are foreign patients and 11% are expat. For Thai patients make up the last 33%. For Myanmar is the largest market outside Thailand. I think it's revenue around 9 or 10% of total revenue of last year, and followed by Qatar, Kuwait, Cambodia, Bangladesh. For Middle East patient is also one of its largest market, around 20% of total foreign patient volume. For IPD baht, utilization rate it average between 60 to 65%. Next. Next, I would like to show that Bumrungrad Hospital business had break to normal levels in the first quarter of last year, as offered foreign patient traffic, especially for Middle East, Saudi, and new markets like Saudi Arabia, pick up after relaxation of COVID-19 and the country's reopening to international visitors in the first quarter of 2021. Second, as offer discount rate to 12.4% in the third quarter of last year that I will show you for the next slide. It fell from 17.3% during the COVID lockdown period in the third quarter of 2021. Also, the economies of scale and increase of 5.8% in medical fees. The last one, as of revenue intensity, also help top line revenue and margins, while SG&A expense remain tightly controlled. But if you look at the second quarter of last year, even it has a traditionally low seasons for hospital in Thailand and coincide with the month of Ramadan, but have a strong pent-up demand. However, it helped keep its patients on the upswing in the second quarter of last year and push revenue and profit growth above pre-pandemic levels in the second quarter of 2019 by 161% and 115% respectively. Next, for this chart shows a reduction of this outlet that I mentioned before. It dropped to 12.4% in the third quarter of last year from 7.3% in the third quarter of 2021. And the figure is expected to fall below 10% of this year. And for the next slide, this slide, it shows about the market segment. Brown color is international patient, green is expat. For the last one, blue color is Thai patient. And you will see the foreign patients contribute up to 56% of total revenue from hospital operation in the third quarter of last year. An increasing share of revenue from high margin foreign patients also help boost the revenue intensity. Means if you have more foreign patients, you will also get higher margins. For next slide. Yep. For this quarter of this year, we expect Bumrungrad Hospital its profit will be better than the first quarter and the fourth quarter of last year. As of first, for patients volume, we hope it will increase both year-on-year and Q-on-Q because of pent-up demand. More patients will return to hospital after long holidays in Thailand in December and Christmas, and more Middle East patients would visit hospital before the month of Ramadan in the second quarters. Second is the reduction of this outlet and annual increase of around 5 or 6% in the medical fees from the start of 2023. The last one, we look at the revenue intensity, driven by a reduction of this outlet. For demand more sophisticated care, especially from foreign patients, and first addition of IPD bed, which allow it to accommodate more patients, would also help lift revenue per bill and margins. Next, I would like to talk about CPALL Public Company Limited. CPALL is Thailand's largest convenience store under the 7-Eleven brand. As of the end of September 2022, is operated network of 13,600 stores, and it plans to add 700 more stores per year. Moreover, CPALL is also a major shareholder of Siam Macro at around 60%, which is Thailand's biggest cash and carry wholesaler and provider of retail and trade space in modern trade store following the consolidation of Lotus. It seems as among the biggest beneficiary of government stimulus measure to boost domestic consumption and tourism, such as the Shop Di Mi Khun, subsidy for low-income earners, and tourism campaigns. For this slide, I'll show you about its strategy. CPALL has a nationwide network of stores scattered in Bangkok and the province. This chart shows 43% of its stores are in Bangkok and its amenities. The remaining are 57% for the province in the third quarter of last year. And also, most of them are still standalone 86%, and in Port gas station 14%. For the store expansion, 526 new stores were added to the chain in the first 9 months of last year, because CPALL set a target of opening at least 700 new stores for the whole of last year, and it will be like that in every year. And what about same-store sales growth? It rebounded by 22.1% year-on-year in the third quarter of last year, supported by a robust comparison in the same periods of 2021, when it took a hit from a COVID lockdown. And it also has continued in the first quarter of last year, despite a high base of comparison in the first quarter of 2021, when lockdown restrictions started to be eased or more relaxed. However, same-store sales growth still increased by 11 to 12% year-on-year in the first quarter of last year. For the spending per ticket in the third quarter of last year is one greater than the pre-COVID levels already. I mean 2019, because tourists, especially the Chinese, they are coming back to Thailand for these quarters. Next, for the last slide of CPALL, we expect CPALL will increase its year-on-year profit recovery in the first quarter of this year. First of all, is the low base of comparisons in the first quarter of 2022 because of the spread of Omicron variants of COVID-19 in the January to February last year. Second, is a recovery in countries' domestic economy from COVID-19 pandemic, driven by improving margin, tourism, government stimulus measure, such as the Shop Di Mi Khun and upcoming general election in 2023. The third is a pickup in the traffic to 7-Eleven store and continued growth in the delivery platform. And the fourth is the product price increase of around 10%. It helped to limit inflation impact from a rising power and transportation bill. And the next, improving gross profit margin trend. It helped by increasing share of sales from high margins and small product on the back of rising foreign and domestic tourist number. And finally, is a stronger recovery in the macro, boosted by the higher HoReCa sales. I mean, hotel, restaurant, and catering business on the back of improving tourism, and also the Lotus lower IT and rebranding expense.
Good afternoon, everyone. I am Adison Mukpanchon. The next is SCB X. SCB operates as a holding company for the Siam Commercial Bank that offer full commercial banking service. It's for the largest market cap in the banking sector. Retail banking strength, retail loan make up the largest share of the total loan portfolio of SCB X at 45%, followed by corporate loan at 37% and SME loan at 18%. Given its high retail exposure, we believe it could offer investors with an opportunity to play on consumption, as retail loan would benefit from a seasonal picking up in consumer spending by year end and during the new year. And the government's consumption stimulus measure, such as Shopee มีคืน tax rebate scheme. Overall loan growth is likely to continue into early this year on the back of strong demand for consumer loans, as SCB is also the biggest mortgage lender among listed banks under our coverage, garnering a market share of to 27.1%. It should also reap the most benefit among others from the extension of the LTV rules and the cuts in property transfer and mortgage fee. Better growth potential after the restructuring. Not only does the transformation into the holding company enhance flexibility in business operation and free it from restriction imposed by Bank of Thailand on commercial banks, but it also help strengthen business capability and open up an opportunity for it to branch out into new business that have earlier been prohibited by commercial banks. In addition, it also create room for strong growth in its subsidiary and make it easier for them to raise the capital on the stock market. Thanks to its subsidiary ability to raise capital on the stock market, there is no need for SCB itself to invest to scale up their business, while funding costs will be cheaper and growth potential will be stronger for its subsidiary, all of which would be a boon to SCB's long-term earning outlook. Rising rate beneficiary. Even though retail loan, most of which have interest rate cap, account for the biggest share of its total loan portfolio, we believe it will stand to reap the benefit of the ongoing interest rate upcycle, as corporate and SME loan that carry floating interest rate still make up a combined 54% of its total loan book. Next is Singer Thailand. Singer assemble and distribute household electric and commercial appliances under the Singer brand, such as sewing machine, refrigerators, TV, agricultural equipment, mobile top-up vending machines, petrol vending machine, and coil-operated washing machine in Thailand. It has its own retail network and nationwide network of sales agents and offer installment financing to its customers. High purchase makes up more than 80% of its total sales, and high purchase service is offered by its subsidiary SCB. A potential beneficiary of year-end spending season and government stimulus measure, Singer is expected to see its sales and loan book growth accelerate in fourth quarter 2022 and well in first quarter in 2023, as it is well positioned to reap windfall from the seasonal year-end spending spurt and the government's consumption stimulus measure, especially the Shopee มีคืน tax rebate scheme, which aim to boost purchasing power, strong expertise, and vast network of retail outlets. And sales agents also give Singer an upper hand in the fast-growing buy now pay later business over its risk rival, which have just entered the fray with strong backing from its parent company J-Mart. one of the country mobile retailer giants. Singer also has the supplier of electronic gadgets and mobile phones. Singer is seen as one of the biggest beneficiaries of improving consumer confidence and government stimulus measures before and after the coming general election, as low-income earner and farmer makes up large chunk of its consumer base. Normally, the government will roll out more stimulus measures before the election in a bid to get more support from the voter, and additional stimulus measures will come out after the new government get formed. SGC, a subsidiary of Singer, made its trading debut on the set in December 2022. Part of the IPO proceeds would be used to fund its business expansion, which could in turn give Singer earnings a boost, while the rest of the proceeds would be used to repay debt to Singer, which would increase Singer liquidity. Capital injection from UCity has made Singer's D/E ratio exceptionally low at a mere 0.52 times, far below its peer SWAT and NTC, which have DE of 1.48 times and 3.4 times, respectively. The IPO finance debt repayment from SGC would also help increase Singer's liquidity. Given its relatively low DE ratio and increased liquidity, Singer should feel less impact from the rising interest rate than its rival. Next is Bangkok Expressway and Metro, or BEM. BEM is Thailand's only set-listed company engaged in the concession business for management of and provision of both expressway and mass rapid transit service. Currently, it holds concession to operate the following three expressways, namely the Sirat Expressway, the Sirat Outer Ring Road Expressway, and the Udon Rataya Expressway. And the following three mass rapid transit lines, namely the MRT Blue Line Chalerm Ratchamongkol, and O&M contract for the MRT Chalong Ratchatham Line, and the MRT Orange Line currently pending contract signing after winning the bid. A plethora of negative factors, including the fallout from the COVID-19 pandemic, which began in 2020, and the government's anti-virus curve, the work from home phenomenon, the closure of schools, and sharp plunge in foreign tourist numbers in the wake of the border lockdown led to a dramatic drop in BEM average daily toll traffic volume and MRT ridership from the 1.24 million trips and 336,000 during the pre-COVID period in 2019 to 850 trips and 146,000 in 2021. Its average daily toll traffic volume and MRT ridership fell to the lowest level since the COVID-19 pandemic began, at 590,000 trips and 60,000 in August 2021. Its expressway traffic volume and MRT ridership show signs of recovery from the COVID-19 fallout in the second half of last year, after the government's anti-virus curves were gradually lifted. As the COVID-19 pandemic eased and country reopened its border to international visitors, the number of its average daily toll traffic volume and MRT ridership climbed back to 84% and 80% of pre-COVID level. The recovery momentum is also likely to extend into this year, helped by a low base of comparison in the first half of last year, when the COVID-19 impact took a toll. A pickup in travel demand back near the pre-COVID levels A passenger fees from the new yellow and pink line mass rapid transit projects, which are slated to begin service this year to the MRT Blue Line. Note that the yellow line has a connection point with the BEM's MRT Blue Line and the uptick in the foreign tourist arrivals, which are expected to double to at least 20 million this year from 11 million last year. Not only does BEM look to be one of the best reopening players in the country recovering economy, but it is also seen as one of the best recovery story in the land transport sector for COVID-19, as it had been quicker to recover from the pandemic compared to its peer DMG and BTS. For Expressway business, this chart shows how fast average daily toll traffic volume between BEM and DMG recover from the COVID-19 blow. BEM's average daily toll traffic volume bounced back to 91% of the pre-COVID-19 levels, while its peer DMG's average daily toll traffic volume picked up to only 70% of the pre-COVID-19 levels. For mass rapid transit service, BEM has also been quicker than its peer BTS to recover from the COVID-19 pandemic. In this chart, BEM's average daily ridership climbed back to 86% of the pre-COVID-19 levels, while BTS average daily ridership bounced back to only 74% of the pre-COVID-19 levels. In addition to its attractive recovery story, more bidding opportunities also lie ahead for the BEM after it won the bid for the right to jointly invest with the government in the Orange Line Western Expansion Project in September last year. The contract signing for the Orange Line is currently pending. If things go according to the plan, the first phase of the Orange Line is scheduled to start operating in 2026 and the whole Orange Line in 2029. The following are three potential new projects which are expected to be up for the grab this year. The first one is the Bangkok Expressway project, which will be constructed over the existing one that BEM has hold a concession. There is a strong chance that BEM will be awarded this project. An EIA study for the project is currently underway after the first public hearing on the project was held on November 23, 2022. Second is the O&M contract for the Taupun Ladburana section of the Purple Line, known as the South Purple Line. Construction of the South Purple Line is expected to be complete in 2027 after contractors have already been selected. The MRTA is likely to negotiate the O&M contract for the South Purple Line with BEM to comply with the government's one line, one operator policy. After BEM won the O&M contract for the Bang Sư Taupun section of the Purple Line, known as the North Purple Line. The last one is the 35 km West Second Outer Ring Road Motorway project. The Department of Highway plan to open the PPP bidding this year. This is the one of the new motorway project that BEM is keen to bid, as it connects with its Silat Outer Ring Road Expressway. We believe all this project would be accretive to BEM's value going forward. Now we open for the Q&A.
Thank you, Shrutikant, Adison, and Hata Chanok for the insightful presentation. Now we've come to the Q&A session. Please take it away, speakers. Thanks.
Now for the question of the outlook of Thai banking sector going into the 2023 and how will the China opening affect the Thailand banks. In the 2023, I think the reopening, the country is make the loan demand increase, and we think the loan growth is increased from the last year. That's caused the interest rate income is growing, but I think the net profit of the banking sector is decreased because the funding to the FIDF is increased. So the cost of funding of Thai bank is increased. So that's caused the net profit of the Thai banking sector is slowed down in the 2023. For the question of the China reopening affect the Thailand banks, all the Thai bank of in our corporate is have the branch in China, but the loan of the China branch is around less than 5% of the total loan of Thai bank. That's not affect much that into the revenue of the Thai banking sector.
Okay, about the okay, can you give the URL to show the various Thailand sector performance till now? Sorry, maybe I can send you by URL, but I can share you about the URL of website of www.tradingview.com. If you go through the website, you can see and you can choose the stock market, Thailand stock market and sector that will show you about the performance 1 month, 3 months, 6 months, and 1 year too. Yeah, you can see by that website. Okay, thank you for your question. And the next question is what is the outlook for the Thailand consumer sector in this year? Okay, let's
Yeah, thank you for your question. We have a positive view for upturn in domestic consumption of coming generation into 2023 and a strong recovery in the tourism, especially China's tourists after relaxing of zero COVID policies. Next question.
Okay, next question. What is the stock cost of SCB Bank? Okay.
SCB Bank is now delisted of the set. Now that trade in the set is SCB X, that the code is SCB.
Okay, if you have any question, you can type in the chat and we will answer the question.
All right. If there's no more questions, we can end it here, if that's okay. Thanks again to our 3 Thailand speakers for the presentation and interactive Q&A. We have now come to the end of the webinar today, and we would like to thank you all for joining.